guys, Dustin Tibbs, financial advisor with Jazz Wealth. I apologize, I broke the mic. So if the audio sounds a little poor today, this is like a crappy backup mic. So sorry, I'll have to get another one ordered. I might have to switch to the other mic in the meantime. But you're here today to talk about the markets. If you're not one of our customers, basically every day we go through, we update on the stock market, free for everybody to check out. We talk about the good, the bad, and the ugly. We got some ugly to talk about today. And then basically we just kind of cover anything that's interesting. If you have any questions, let me know. I will pull up the chat thing. I'll try to save that until the end. If you're thinking about you need any help, you need any sort of help with your investments, check us out at Jazz Wealth. You can schedule a call to chat with us, and also check around on our website. Click on portfolios. You can see the portfolios that we manage and the performance. How do they do? So we will dive right in. Hey, if you're one of our customers, you probably are going to want this towel today. This is one of the things that we're sending out to our customers. Just send me an email, let me know if you want it. It says the markets recover 100% from every decline ever, 100% of the time. That's the idea, right? When the markets fall, they have these crazy, crappy days like they did today. It's the idea that you know you're invested correctly, and it's a matter of statistics, right? So we're going to play that game. I'm going to try to slide over to the side here. We'll bring the charts up, talk a little bit more about what happened in the markets today, because today was a wild ride, to be honest with you. The Dow was up about 300 points to get started on the day. Everything was very positive, and then all of a sudden it started sliding, and worse got worse, worse got a little worse, and we closed down on the day. Now, luckily, you're able to kind of see that from the beginning. All the focus was over on oil, so let me go over to the price of oil on my screen here. Here you can see what's happened. And also, if you are one of our customers and you have no idea what you're looking at here on this screen, next Tuesday we're going to do a class just for you guys in the evening time. So grab a glass of wine. We call it Wine and Wealth. We talk about things that maybe you never knew, things that we can teach you about the markets, about investing, savings, budgeting, anything. Well, we'll go over those charts next week so you know exactly what in the world all this stuff is on the screen. This is the price of oil, and basically if you look over to the right, the price of oil hit new highs. That bubble's telling you that's a new high price. An amazing quick recovery from oil, just a string of news to affect the possible supply of oil, all the way down to supply concerns in now Libya. And so just the thought, just the news behind that certainly has an effect on the price of oil. If you follow any sort of energy tracking exchange traded fund, or you follow stocks in general, you had stocks like Apache with a 4% gain on the day. That was one of your leaders in the S&P. Freeport McMoran, also one of your leaders in the S&P. I'm going to just take a quick look while we're here. Was that basically every stock? Yeah, all the top gainers in the S&P today. Oil service, well, pharmaceutical company, oil, there's Hess making new highs. We all know about Hess. So the real focus to start the day was on energy, like, oh my gosh, the markets are higher and oil is pushing higher. But the problem that we run into is tech stocks, they continue to push lower. So we talked about this over the past couple of days, actually, needing tech and needing financials for the stock market to rally. We're not getting it. Right, we had tech, and tech is currently breathing out. If you follow our videos, real simple, just breathing in, breathing out, breathing in, breathing out. That's how the stock market moves, and of course individual sectors. And so for now we have a big exhale going into the end of the quarter for the tech stocks. You look at names, look at names like Netflix continuing to push lower after having an amazing run up there. Very natural for that to happen. Amazon also pulling back. Look, these things have had amazing runs here. Very normal for some of them to start pulling back and taking a break. I really don't find any fear in that at all. What I do sort of get bothered by is the financials. Oh my gosh, the bank stocks. And now what's happening is we had the big bank stocks, like what you're seeing here on the screen, the XLF tracks the big bank stocks. We had all of them starting to pull back, not participating in any up move in the market. But now you got the regional bank stocks also. So the whole group of banking stocks starting to really pull lower here. I continue to be very concerned that as we break through these lows, bank stocks are going to continue to push. Now tomorrow we have stress tests. The second round of stress tests come out from the Federal Reserve. I don't really expect anything shocking there. I think we would already know if something was going to happen. But bank stocks just can't catch a break. The spread between the 2-year and the 5-year note, I actually can't pull it up. I can pull up the notes. is getting tighter and tighter. The yield curve is flattening and flattening and flattening. Basically, 2 more rate hikes takes care of it. We will have a flat to inverted yield curve. So banks obviously don't want to see that. That's not very good. And that's where the banks were to start the day. So as you look around, or actually to finish the day, as you look around, you still have names like JP Morgan. Goldman Sachs has not participated in months in the markets. That, we would say, is trading at a pretty severe discount. Morgan Stanley also trading at a discounted place here. Big breath out. If you think of it that way, big breath out. Just incredible. Gold also selling off. That to me is getting a little overextended. That might be what they call oversold in the meantime, meaning people have just pushed a little too hard and sold off a little too aggressively. Short-term traders will probably be looking at that for a quick little bounce. We pointed out oil making the new highs there. It's incredible, right? So don't think that this goes in one straight line, by the way. So you see the price of oil just rocketing higher. Don't dive on that now, right? You nibble. If you're a short-term trader, you might nibble a little bit, but you don't go diving in on something that's already rocketed up there over the past couple days. So continues to be that tech, with using the semiconductors here on the screen, tech and financials, man, they just don't want to help out the stock markets. And so that's actually really been kind of hurting here over the last couple days. You got ConAgra Foods. That was talking about stocks that are down on the day. ConAgra Foods down 7.25% on the day. They're buying Pinnacle Foods. I believe PF is the stock there. So ConAgra trying to make a move maybe into more some of the frozen foods. We'll see what happens there. General Mills. There we go. General Mills reported earnings. Basically mixed. The only negative that you really saw out of General Mills was that they pretty much just said they think sales are going to be flat for the next year. So obviously that's not a good sign. The stock really didn't do a whole lot today, but that was in the news. And check this one out. WWE World. That's what it is, right? If you guessed what WWE was, you'd be correct. That is World Wrestling Entertainment. And so what that is the wrestlers, right? It's a public company. It's a very well-run public company, by the way. They re-upped their deal with Fox and USA. And they re-upped their deal for 300% more than what they were already getting paid. So getting some big-time dollars there, WWE. And that stock is higher by 115% just this year alone. If you look over here, here's January right there, right? So if we go from, let's call it January 2nd, there we go. January 2nd up to today, actually closer to 131% gain on that stock. So I don't know, like, I don't really follow wrestling, but apparently I should follow the dollars when it comes to wrestling. That's incredible. Okay, GE's moving higher here after hours. Some kind of headlines come out. Bed Bath & Beyond. Earnings have come out and stocks down 6%. No, yeah, it is Bed Bath & Beyond. Pier 1 also reporting earnings after the close here. I don't think I've ever seen Pier 1 go higher on earnings, so that one's also lower on earnings. You can actually see it on the chart if you look closely there after releasing earnings. So that stock is down 6% after the close. And really, there's not much else to say. Well, one of the interesting things is the Russell 2000. That was your leader all these weeks. It was pushing more and more aggressive. You got a lot of profit taking going on in the Russell 2000 as the quarter comes to an end. Every single quarter is a big focus for investors. They call it window dressing. That's kind of done these days. That's not really the case anymore. But basically, people are making adjustments into the end of the quarter so that if you have if you're in a hedge fund, if you're in some kind of mutual fund and you get quarterly statements, basically they're making adjustments and in preparation for sending out those statements. And so profit taking all around, right? I don't really have much else to say in that respect. Just kind of a crappy day. Now, market-wise, you don't expect the markets to completely recover from here. So if you're thinking about this, remember 2 days ago we talked about getting punched in the face. Or yesterday we talked about this. When the markets get punched in the face, they don't just get up and walk away. And Monday was a big punch in the face for the markets. Plain and simple. So the S&P, the Nasdaq, especially the Nasdaq, and the Dow, they all got punched in the face. You would not expect them to turn around and go back up. Your preference actually would be that they fall rapidly from here. That would attract more buyers. No one is going to step up when the markets get punched in the face to try to pick it back up. You don't want to walk in front of that. Now we want to see a discount. So all the short-term traders, everybody that's starting to prep for the rest of the year is looking for that discount. Make it worth their while. Where's the money, right? And so you'd actually prefer that the markets just fall quickly, get it over with, and start to recover from there, because you'll have people that are going to buy anyways, the long-term investors, and then you're going to have the short-term traders say, that's a good deal. So when I look around at the financials, I look at the financials and say that's quite a beating there. You want them to fall as rapidly as possible. Semiconductors, you want them to fall as rapidly as possible, and then watch everybody dive in and start buying everything up. So that's basically all I have for you. I will keep it kind of short. I hope the audio is not too bad. I feel bad if the audio is bad, but you know, we'll fix it. We'll get to it. It's all my fault. I stepped on the cord and I pulled it, and then it ripped the whole thing off there. So my bad. We'll be back tomorrow to continue with our Geeky Week. If you haven't seen our 1 o'clock videos, we're covering some really in-depth topics this week. We're taking it a little bit step further just for the rest of the week. Then we'll be back. If you're one of our customers, you want that towel, let me know. If I've helped you in some way, please hit the subscribe button. It means a lot to us. And hit the bell. That'll let you know exactly when we go live. So enjoy the rest of your day or evening. If you have you need any help, go to jazzwealth.com, click Chat with Jazz, or take a look at our portfolios, or click Invest Now. We'll help you get started. Enjoy. We'll talk to you soon.